Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, the 25th of October, 2018, about 4:40 p.m. Central Daylight Time. So the boards behind me are still live. In 5 minutes, they'll clear. We had a good up day in the stock market, but not a stellar one. Given the size of the breaks we've had, at one point today you were a lot higher than this. You finished out at 24,877, but you were 200 points more than that, and late in the day, everything started eroding. Amazon earnings came out, and they were okay, but it's the forward guidance. You know, they're telling us that instead of a big Christmas season, it won't be quite that big. And the market didn't like it, and Amazon stock tanked, went down about $135 a share. Now, whether it'll be down there when the markets open up again, I can't begin to tell you, but it's going to weigh on these markets to a degree. We'll see what goes on through there. You'll notice bonds and notes didn't get any bids today, a little bit of an offer, but after this big of a decline and then you get a bounce, it's not a trend change. That's what's wrong. Markets will work for a trend change, and I think that's where you're at. When we look at the weekly area chart of closes on the S&P, I'm leaving this up right now. This is where the market finished. That blue line on 2017, the last trading day of the year was the 29th in December. So you're not far away from it. This market's, I think, trying to target that. And for the week, you're down right now 79 points. When you take a look at a daily bar chart, admittedly, you got a bounce, but I don't see anything here that says the market is bottomed out at all. I see a bounce and no more than that as a technician. I look at the market still having lower highs, lower lows under the current pattern, and patterns change. Right now, you'd have to take out 2,850 to tell me that you can break that pattern. That's a long way off. It's 112 points. I don't think that's going to happen. To get up to that number, you got to get through the 200-day moving average. The fact that you're so far under it is not a good sign. That's an ugly sign for the market. And of course, November 6th is waiting on this. And I saw a poll today that said that 58% of the people are looking at the president to decide how they're going to make their vote. I think he's up to the job. I hope that that is an accurate thing. Lower highs, lower lows, resistance, 27.76. We'll see if you can get there. I have my doubts. I wouldn't be surprised if the market breaks again, that the market challenges the lower Bollinger Band. Somewhere along the line here, we'll get failures to the downside. This is a bounce off the downside. I can't call it a failure off of it. When we come to the close on the daily chart, this is different than the weekly. You've gotten under that number, and now you're back over it. Okay, so you're playing right where you were at the end of 2017. And I got the dates right today, by the way, thanks to Lewis. In a long story on the NASDAQ, I don't know where the name went up here, but I'll get it back for you. Lower highs, lower lows, bearish. The market has to fall quite a bit further, but it's going to get a little boost if Amazon's doing what I looked at. It could get a little fireworks here. We'll see if it can get back to the lower Bollinger Band, but I'm not seeing anything friendly on the chart. Unlike the S&P, at least you're not far from the 200-day average. You got to start somewhere with resistance. In the Dow Jones, today you can see you're fighting at that the old close. And that's a couple of days in a row. You made a run today, couldn't get to that 200-day average. You'll keep hearing about it. A lot of traders look at that because it makes up almost a full year. So now the market's under that, and there's nothing bullish when you're under that number. Nothing. It's not a good sign. The Russell, under that number as well, bounced away from the lower Bollinger Band, but it still has what? You know what I'm going to say. You still got the embedded reading. It means that rallies are still being sold. When you red line gets over 20, I'll be prepared to say whether I'm right or wrong. That's when I think price and the 18-day average will make a run at each other. You're not there. In the VIX, momentum is flat, but the trend is up. Will you go up and challenge that high again? That's how I'm reading the question. In the bond market, you still have higher lows. Now, will you make a lower high? Can't do it right here. Today's high was exactly the same as 2 days ago. Most you can do on the pullback is have equal highs back to support at the 18-day average of closes. Why I wonder if they'll be buying is because you're overbought. You've got a 73 reading. A lot of traders look at different numbers and it takes them out of doing certain things on a chart. Overbought could be one of those. The same thing in the 10-year notes. Notice twice you've gone up to that upper Bollinger Band now and it's throwing the market back. That's what its job is. When we look at TLT, no big change here. You got the higher high, lower low, which is not a trend. It's riding 3 days now against that 18-day average of closes. Momentum in the chart, not overbought. So we'll see which way it wants to go. It's a flip of a coin. It's not a trend. In the dollar index, strength. The market's 2 days in a row over the upper Bollinger Band. Now understand, markets only spend 5% of their time above a Bollinger Band or below it. It initially goes there when the market breaks out of generally sideways trade. This isn't what I would call sideways trade. So I think the market's getting ahead of itself when I say that. Again, buying over a Bollinger Band, you can generally do better. The word is generally. I can't tell you that it just doesn't zoom to the upside. Nobody knows, starting with me, and then after that, the rest of the people. In the eurocurrency, same thing. It's a mirror image. They are just going the other way. A lot of traders didn't think the euro would get this low, and a lot of traders didn't think the dollar was going to be able to get up this high and go for the year's highs. That seems to be what's going on. In the British pound, as I've been a broken record here, I keep telling you, this is ugly. You just don't know which way Brexit's going. I am not hearing anything good. I have not heard anything as to how the Irish situation's going to be handled, and the UK is not going to have two different zones in the UK that I can imagine. They're not going to give that up. Lower highs, lower lows. Plans are being made all through the UK by the government now. They're getting now antsy where they've got to put out circulars. What do you do if you live there? How do you get goods in if you're a merchant? What do you do? Because you're not going to have any trade rules with the EU if they don't do something. In the Japanese yen, you come down to the 18-day average, you shoot back up, the trend is up, the bias is flat to trying to put down. It's just sideways here. It's a difficult game to trade with that. Bitcoin has lost all of its volatility. So the big question is, with all this sideways action that's now going on, is the market getting ready for another down leg, or will this turn out to be a base to the upside? If you can guess it right, that's how you can do well in the market. I don't know which way it's going to go. I still have a problem that I don't understand why there's a value or a need for this. And that is my problem. I do understand blockchain technology. I get what the banks are doing. I get that there's 4 big ag firms going to do blockchain now. And I'm talking not futures. I'm talking the ADMs, the Cargills. They're going to it. That's different than Bitcoin. That's different than all these cryptocurrencies. So I have a problem in understanding why they should go anywhere. In the Brent, I look at the market is coming back down. And a big question was asked to me today in our webinar. What's the next move in that? I can't answer it. What I can tell you is I read an interesting story where now Permian Basin producers are now finding and creating a contract that will allow them to use the differential between Brent and WTI, lock that in as a hedge. So if the difference is tonight 956 and you do a hedge with that, it can widen out to any number. That's going to be your difference. The pain will be if it comes in a lot because you're getting that difference and it could be down to $2. It goes both ways, but they're coming up with ideas trying to figure all that out. When I come to the futures contract, I've got a bearish look. I've got an embedded reading, a market that's gotten a bounce. I don't think it's going anywhere. Lower highs, lower lows. You've came up and fought what? The number that you were trying to support yourself at, the 100-day average you fell from. Now, what was support becomes the first leg of resistance. But even if this market rallied sharply, you've got to get through 80, 89 to negate the pattern of lower highs, lower lows. And you've got resistance now falling in the 18-day average of closes. I don't see anything looking good on this chart. I have the same thing, and that's Brent. WTI, I have the same exact picture. It still continues to look bearish to me. Rebob gasoline has fallen apart. 215 to 179. Wow. Is this how the world feels about it? Is there something else going on? These are big-time breaks. We were talking about it in the office. Not one of us thought you were going to get a 50-cent break. Is that good or bad? Maybe we should all be punished. I don't know. Natural gas throughout its first bearish signal. Lower highs, lower lows, under the 18-day average. I'm going to look for the pros to be selling at 327. I think they throw in the towel if you get back over 331.40. Momentum is down, bias is down, and now the swing line is down. We talk about, and you hear me talk about what we talk about in the office. And if you were here, you'd love to be here. People would pay for that because we're all pros and we have an awful lot to say. And what goes on is we write about this. Now, I have my own research. A lot of people subscribe to that. But our firm has some of the top-notch guys you can imagine. We're not talking people in the game 2 year and they're going on the internet and they're looking up to see facts. Seasoned people. We talk to people for hedging needs. We talk to them for speculation. Some people just want spread strategies. Others want option strategies. We cover them in all these different markets. And while the pits are still around, we even have people in the trading pits telling you what went on for that day, and you're covered through the evening. We don't go home at 4 o'clock. You're going to get research through the evening. How do you get a trial to it if you haven't seen it? Well, I'd recommend that you either give us a call, you can go to our website, sign up for it, and pick the numbers that you want and click up here. We're putting in a lot of safeguards on this information where it's not going to be able to be passed around. It's going to go to a certain computer that you have, and it'll be looked at for only a certain period of time. We know our information gets passed around, and we know people want it. That's going to end. I'm Ira Epstein. You have yourself a great day. Take advantage of this, and I'll see you tomorrow.